Well, the Bank of Japan is expected to unwind its negative interest rate policy in 2024, and the fallout in U.S. Treasuries could be huge. Here with more on this, we've got Yahoo Finance reporter Ines Ferre. Ines, what is the expectation here?
Yeah, Brad. Well, the Bank of Japan has been kind of moving in opposite directions to other central banks that have been tightening their monetary policy. The Bank of Japan, back in 2016, started this sub-zero interest rate policy, yield curve control. That's where they buy bonds to target certain interest rates and to control certain parts of the yield curve, usually the 10-year Treasury yield. And this is very significant because now the expectation in the market is that the Bank of Japan is going to reverse to end that sub-zero rate policy in the first half of 2024. And what happens when the Bank of Japan does that? Well, the market is expecting that to have ramifications in other parts of the world. And just to back up for a second, Japan's 10-year Treasury yield is right now at below 0.9%. That's compared to the U.S. 10-year Treasury yield, for example, that's at around 4.9%. It had topped 5% for the first time since 2007 this week. But this is important because if yields for Japanese treasuries become more attractive, if they're more attractive locally, then that would mean that Japanese investors would start to flow money back into their own country, because that would impact the flows of money to other treasuries, including U.S. Treasuries, including Australian Treasuries, also European Treasuries. And this is important because Japanese investors are the biggest holders, foreign holders of U.S. government bonds. And a Bloomberg survey shows that 61% of respondents are expecting global bond market volatility to spike when the BOJ changes its policy. And already we have seen volatility in the U.S. Treasury market. As I was mentioning, you have U.S. debt that's higher, you have government spending that's higher, interest rates that are higher. So what that has done is that it has made the Treasury Department basically issue more treasuries, more bonds, more notes, and that has created volatility in the market at a time when other central banks have sort of pared back their buying of U.S. Treasuries. So it'll be interesting to see how the BOJ's actions impact Treasury markets around the world.
Something we will be watching. All right, Ines, thanks.